Hey, what's happening, guys? Dan Darrow here from Options and Play. So, today I'm going to talk about rolling options, all right? So, this is a super important topic because trade management is so critical to your long term success as a trader, all right? Maybe you have some familiarity with this, maybe you don't. Either way, I want to spend some time talking about it, and I'm going to give you an idea of kind of what I look for and what I'm doing when I'm rolling, all right? So, first things first, day trading, swing trading, event trading. All right. Those are what maybe like my three biggest classifications of option trading. They're all going to have a slightly different method for managing trade risk. Day trades, very short term clearly. So the goal is to have targets that are closer to the money or something more easily hit, right? More easily achievable. Also, tight stops and more aggressive taking risk off, right? Like those are like kind of like the hallmarks of day trades. Event trading is a little bit more boom and bust, right? Stocks, they report earnings, they have a major event. They're going to have huge gaps and swings, and there's really not always a chance to scale back risk post event. I mean, sometimes things just move so sharply, there's not that opportunity, right? So the focus of Roland's really going to be on swing trading. Um, Swing trades tend to have a longer term profile, develop more gradually, and usually allow you to work into and out of more size, right? So before we get into that, before we get into Roland specifically, need to at least have some targets, right, to know when to roll. I mean, it's you need some sort of guideline to know when to roll. I mean, it's part of the actual trade, right? So I personally like to have two targets before I enter a trade. Obviously, it's stop too. I mean, targets and stops both are just as important. My first target is typically something closer to the money, easier to hit. The second target's definitely going to be more aggressive, and it actually might be a little bit more. It might require more time, right? So it's a more aggressive, maybe price target, profit target, which I'll get to in a second, and it oftentimes is going to take a little bit more time to get into that range. Okay, so my targets, I like to use either technical indicators or profit percentages. And for technical levels, I like to use moving averages. All right, so I've talked about the 8 EMA, the 20 simple, 50 simple, 100 simple, 200 simple. Those are kind of the averages I focus on most. Um, Also, give me key resistance or support levels, right? Like 52-week high, 52-week low, maybe monthly support, yearly support, so on and so forth. Okay, and then the last one I like to use is what I call measured move extension levels. So that means, just for example, that if a stock is about to break out, right, through maybe like yearly resistance is about to break out, about to happen, I like to use like a basic 10% measured move from that breakout range as a target zone. So not like super math heavy. It's just a kind of like a generic 5% extension from a breakout or breakdown, 10%, 20%, etc. Okay. Now, profit percentages for targets, those are going to relate to the actual option prices, so not the stock prices. The profit percentage will relate to the option price. Uh, so I like to use 50% or 100% gains as possible targets. So, for instance, like say you're in a call and it goes up 50%, right? So you bought a call for $1 and it goes up 50 cents, so it's worth $1.50. It's a 50% profit on your position, right? So I'd like to possibly use that opportunity as a chance to roll, right? Pretty self-explanatory there for the targets. All right, so get the targets out of the way. So the question is, what exactly is rolling? All right, so rolling an option by definition means closing a current contract and buying another contract with a higher or lower strike price on the same stock. So, um, whether it's higher or lower is going to depend on whether it's a call or a put, right? So it's going to be a higher for if you're rolling a call, and it's going to be lower if you're rolling a put. Now, this is really important. The new contract should cost less than the previous one, lowering the total money at risk in the trade. Okay, I'm gonna get to that in the next slide or in two slides. Kind of talking about well, why that's so important and how it like fits into my rolling strategy. So rolling typically happens when the stock or the contract is moved in your favor as a way to lock in money. All right. Okay, so here's it's just going to be a hypothetical example with gold options, right? So say for instance you're long the GLD 140 strike call, all right, and it's moved in your favor, uh, and you want to roll, all right. So maybe it hit your target, you're made some money on it, and you want to roll, right? So this is just going to be a really straightforward. It's just just to show you what I mean with rolling. We're not going to get into the numbers just yet. So say you have a 140 strike call, you want to roll up. What you would do is you would close that call and you would maybe buy a 142 or a 143 or a 144. Basically, it just means closing the current call or the current position and rolling up to something higher. So closing the 140, buying something higher. So 142, 143, 144, etc. Right? So you're just looking to reduce risk, lock in money, and still have exposure to the GLD. Okay. Now, most traders are going to have a slightly different rolling style. I'm just going to talk about mine here. Once a stock hits my first target, whether it's one of those technical levels I covered or if it's a profit percentage, my main goal is to lock in money and cut risk. Okay. My game plan, once that target is hit, is to close the current position and roll up to a contract that is less than the original net debit paid. Okay, so that the net debit is what the original amount was you paid for the position. Okay, so I say net debit. It basically means the price paid for that original call. Okay, and it's really important. I can't stress this enough for the roll up to be less than the original because this will mean that the overall trade comes out profitable even if the roll expires worthless. And I'll show you an example next second what I mean by that. I like to extend the timeline of the trade also, if possible. Not always possible, but I like to push the time frame out maybe like a couple weeks to a month when I'm rolling just to give the trade more time to develop. Like I said, it's not always possible, and sometimes it really doesn't make sense just from like a trade perspective to do it. But when I can, I like maybe a couple extra weeks or even like a month. I mean, it really all depends on like the trade, but it is something I like to do when I can. Also, sometimes when I roll up, I'll have to use spreads or possibly even like a different type of strategy to make sure that my risk on that roll is below the original debit paid. So sometimes you need to get a little bit more creative, open up the playbook because just buying like a standard call or standard put might not let you get that risk down as much. Okay. Okay, so here's an example of my rolling style. So KHC Kraft Heinz was a recent bullish swing. Looking for this was after it got hit on earnings. It's down around like 25, and the bullish swing was looking for a move back into the earnings gap. Okay, so the original trade was October 2750 call that was opened in the middle of August at the first arrow here. So um, took a little while, but things finally started to move. The stock started to rally, and then within a couple weeks, it had hit the first target of the high of the gap and made a push into the moving average. Okay, so like I said, gaps. So key levels of resistance, gaps, moving averages. It hit the 50-day. So that was like the preliminary target range. So once it hit that, the second arrow, it's time to roll, right? So that the original October 2750 call. Um, which cost 50 cents, was rolled up to was sold for $1.75, and then that was rolled up to October 30 strike call for 40 cents. Okay, so in this case, the expiration was the same. So October and October, same expiration, but you can see right that the debit original was 50 cents. It was closed, and then the roll up was 40 cents. So the debit of the roll was lower than the original amount. So the original 50, roll 40, right? So what this means is that the 2750 call were sold for $1.25 profit, right? Which is $1.75 minus 50 cents, so $1.25 profit. Then the roll was open for 40 cents, right? So even if that roll expires worthless, say that it just, the stock falls apart or even just flatlines in October, 30 strike call expires worthless, then the overall trade is still going to be up 85 cents, right? Like the $1.25 that the initial call was sold for minus the 40 cents of the roll, right? So that's why it's rolling is really so critical because it's a way to scale back risk, right? Still stick with the idea, still give you exposure for another potential move, but it also, if done well and if done properly, it really helps you like lock in like these types of moves and not let all of like these trades come back on you, right? So in this case, the money was taken off the table, and at the roll, right? So even if the roll expired worthless, the overall trade would still be ahead. All right. So just to summarize, rolling options, it's a trade management strategy, and really like the key is reducing risk and locking in money. All right. Different types of trades are going to have different risk profiles, but it's really always important to have stops and targets. I mean, that's one of like the things that you always need to have in place prior to getting into the trade. And then also you need a game plan, uh, how you plan on managing that trade or that position once it starts moving, right? So once those targets and stops are hit. The goal of rolling is going to be to revert your net debit, so your price paid or risk, back below the original amount that you laid out. And me personally, I like to possibly add extra time to the trade if the situation supports it. All right. Okay, so I hope this lesson on rolling trade management was helpful. If you want more information about options trading, or if you're interested in actual trade ideas, definitely be sure to follow up with the link in the video description for more information on options to play. So I hope you all have a wonderful night and best of luck with your trades. I'll talk to you soon. All right.